We are here, we are here, we are here on this amazing day. Everyone, this is Cam Jones, FX Daily Analysis, and we are marking up ALICE USD. Look at what's going on in the market. We are on the monthly time frame. Price action, last candle in the market, only candle in the market on the monthly time frame is a doji. What's a doji? Indecisive candle. Indecisive candle meaning that the market is in a consolidation as we walk further down the market. Headed down to the weekly time frame. Let's see what's going on. On the weekly time frame, what do we receive? I mean, we can see areas of highest wicks, a midpoint in the middle. Price started off here. I mean, it bounced up and down, but the solid price is here to kind of break in the midpoint. So we're going to see what's going on as we walk down further. Keeping the big lines today. Headed down to the daily time frame. We can see market started off at the low, pushed up to a high, came back to the midpoint. So what that is, just the break and retest of that market on the daily time frame. Market is also consolidating. Price action candle is a doji. Okay, so we had the consolidation, so we're waiting for that big candle to break out to the top side, or to the downside, it's going to push that market down, or maybe push that market up. If not, we'll continue to get dojis working its way sideways. Headed down to the 4-hour. Price action on the 4-hour, inverted bullish hammer. Okay, price is working its way up. Patterns in that area. We do see that first leg, second leg, third leg. Market did break that SR line that we did create. So that's the break. We may be looking at a retest of the previous area for that market to push up. If not, we are on the 4-hour time frame. So we may just get bullish candles working its way up back to previous areas of highs. Market price is rejected, and we run into that area of resistance. The market's on that decline for the drop. What are we looking for? We look for that market to show that first leg, second leg, third leg, fourth leg retest. Market drops down. So market's coming from some type of double top and a retest, or a single top and a double retest, and the market could be dropping down. But we can clearly see, if you want to make it a lot tighter, you can see that M pattern has to be forming in that area. For that first leg, second leg, third leg, we're looking for a market to identify itself here with the structure, and we look for that market to drop down if it does. So it's going to be first, second, third, market drops down for that fourth leg. Get the break and retest of the SR line, and we'll see where the market goes from there. Headed down to the 3-hour time frame. Price action on the 3-hour time frame is a bullish inverted hammer. Price is working its way up, but having a hard time. Why? Because we can see that price did break above the second last candle, not by much. Price action wick is not above second last candle wick, so it's doing some type of consolidation. So what we're going to do is connect the wicks, connect the bodies. Now we're going to see that wedge pattern, see if we can form that pattern. The pattern's going to form in that area. Headed down to the 2-hour. Headed down to the 1. Okay, so 2 and a 1, 3, 2 is identifying the same candles. On the 1-hour time frame, price action candle is a inverted bullish hammer. What the market did was it's draw it out. Market did a double top, so we got a double top here. Market spiked up twice. Came back to second level lows. A midpoint is somewhere here. So market stopped at second level lows, and now it's trying to push up out of here. If it doesn't push up out of here, it creates a triple top. So let's zoom in a little bit closer. So if it doesn't break up out of here, it will be doing a triple top. So it will be that first leg, second leg, third leg. So that's a double top. Push down, pushes back up. So if it doesn't cap itself off at this area here, that'll be 3 pushes to the top, and then market pushes right back down for that triple top. May see a retest, maybe not. Headed down to the 45-minute. That's a break and retest. So market just broke, came back to retest. So it's breaking second level high. So if I clear this off, so we're going to get rid of that wedge pattern. We can see that market is wedging very tightly as we walk down the structure. Still looking for that breakout. This is highest highs, midpoint, lowest lows. Throw a SR line on that midpoint line of second. So that creates that second level highs. So what the market did, as Joe about screamed out a little bit, market came from that midpoint, broke, came back to return. So we got the break and retest, not the full retest, but we have a retest, candle, second last candle. We're going to see that market's going to push up. If not, then we're looking for that market to break, fully come back down to this area and look for entry, see that work its way up. But pattern is going to identify itself here with some type of engulfing pattern to the upside or downside. Walking down the structure to the 30-minute time frame. Price action is an inverted bullish hammer. It is not above the second last candle, which is a doji, so that market is not going to push up. So that means that market is still is a 50-50 chance it could push up. It's a 50-50 chance it can consolidate. So until we see a body break above the previous body, we'll see that market start working its way up the incline. If not, gotta wait for the next candle to form. Head down to the 15-minute time frame. On the 15-minute time frame, the structure has to be forming. We see the consolidation area that we in after that break and retest. So market broke, came back, retest, pushed up a little bit. Is it going to cap itself off at? If it does, that's an M pattern. So we look for that first leg, second leg, third leg. Market pushes down for that fourth. So basically, market may be returning back to previous areas of that midpoint line to finally push up. If not, push down. If not, continue consolidate sideways. Market's going to be respected in this area on that 15-minute time frame. You could be looking for that first leg, second leg, market coming down for that third, push up for that fourth, or we'll just receive the break, retest, and a push up. From here, the market works its way up. The incline W. Headed down to the 5-minute time frame. Excuse me. Price action to doji. So we're waiting for the next candle to engulf that candle to the upside or downside that can push that market up or down, or that market will continue to consolidate sideways. Headed down to a 3-minute time frame. Price action on the 3-minute is a solid bearish candle. It did not engulf the second last candle, so it is considered a doji. So because it's in the range of that second last candle, it did not break below or close out, or break above and close up to the upside. Price action on the 1-minute time frame is a solid bearish candle as well, very small, smaller than the previous one. So price is doing side by side, could be doing a double bottom. It is doing a double bottom in that area because we got side by side. So let's take a closer look at what's going on in this area. The market is in that range of previous areas of these dojis, one and two. We can see that market is respecting that area. If you look at that whole full area of all those spike downs, 1, 2, 3, and market has that double bottom. We're gonna see that market's gonna reverse to come back up. So we look for that first, second, third. Market respects for that W formation. That market's coming down from that double top, which will be the first leg, second leg, third leg. Market engulfs the 1, 2, 3, 4, 5, fifth to last candle, which puts that market down. Okay, guys, very important information. Please study and review Forex pattern cheat sheet. Click on images. Very important information, guys. Please study breakout retest strategy. Click on images. Okay, guys, this is Cam Jones, FX Daily Analysis. Thank you for watching. Thank you for your attention. ALICE USD crypto.